Well, just like Mr. Tim just mentioned, markets are open. Let's find out what's going on. Now, we were just about flat in the row crops last night on the overnight trade, 2 to 3 cents higher for the wheat market. And as we get the day started over here in the corn market, we find that March is up a half a penny. It's at 3.87, a penny off of the low. May is up a quarter, and the July is up a quarter. All right, let's go on over to the soybean market. We're 2 1/4 cents higher for January. March is up 2 1/2, 9.38 3/4, and the May is up 2 1/4. The Chicago wheat market for this Friday morning is down 3 3/4. What a change here. March 541 1/2, the July down 3 1/2. Kansas City wheat, it's on the lower side by a quarter of a penny to a half a penny out there in that July. And Brian Hoops is here with us this morning to talk about why this Kansas City wheat market and the Chicago wheat market got a little bit soft from the overnight trade. Good morning, Brian. What are you folks there at Midwest Market Solutions thinkings behind all this?
Yeah, good morning, John. Not much volume is a big culprit of what's happening in here. So it just takes just a few orders to kind of move the market in one direction, and there's not much buying or selling to stop it. So, a little bit higher overnight in the wheat, but no real fundamentals behind it. A higher U.S. dollar this morning, that's strengthening, and that's putting a little pressure against this wheat. And we're just uncovering some, very light volume, very light selling coming into the market.
Expect that now through all the way into 2020 now. There's just this very light, thin, easy to push around type kind of a trade?
Yeah, that's what we expect. Next week and the week after that are both going to be holiday shortened weeks. Early closes on Tuesday and then no trade Wednesday and into Thursday morning. So, yeah, there's a lot of people just kind of closing the books and forgetting about marketing and trading right now. So there's a lot of volume that's not there. You can see that in the trading ranges. Corn has less than a 2-cent range, beans less than a 4-cent range from high to low so far.
Brian, what about this now that we've got this trade agreement voted for in the House? It's on its way to the Senate. It's expected to be passed for the USMCA. The trade just kind of seems to be taking it in stride. Was a lot of that already built into anticipation that it was going to be a done deal in the market?
Right. Yeah, this had been sat on for quite some time. It was anticipated we get this done. Maybe there was some fine-tuning done, but, for the most part, we've anticipated it, had a lot of good relations already with Mexico, and this wasn't anything that is going to really shock or move the market violently in one direction or one manner.
Yeah, but Brian, I have heard people in the trade talk about, well, when we get the phase 1 deal signed, when we get the phase deal done signed, or when we get trade with China wrapped up and confirmed and the ink is dry. I've heard that said too. So as a producer and an end user, do you look at this and say, well, maybe once we get that trade deal done, the same thing could occur that we've seen what has happened with the USMCA?
I really don't think we're going to see much in the way of any major moves coming out of either one of these agreements once everything is signed and is done. We need to see actual what is happening, purchases being made, how the quantities and the specifics, rather than just a signature with an agreement. So I don't know that we'll see any major moves. Market is built on anticipating moves, and that's what we saw. We started a rally in soybeans and corn off of rumors that we were getting close to reaching an agreement. Market rallied, and then once it was announced, we really haven't gone anywhere since that time frame.
Brian, I want you to stick around, and we'll walk through the livestock futures open here next. Stay with us. More is coming up right after the break. All right, time to find out what the futures are doing here this morning in the livestock side at the CME Group. Okay, live cattle comes first, and the front month in the live cattle contract is the December. It's down 20 at 121.92. Not quite the low, but we are 12 cents away from it. February is our next front month. That's got more volume to it, if we can talk about volume. Down 28 at 125.35. The April is down 42. The feeder cattle market this morning getting off to a lower start also. January down 35, 144.38. The March is down 38 and the April's down 35. In the hog complex to start the day, we're lower here as well, with February down 45 at 70.53. $71 is our high there. April down 25, and the May is steady at an even $84. A little bit of weakness over here to start the day in the protein complex, Brian.
Yeah, there really is. I think we're looking ahead to this afternoon's cattle on feed report. That report could show a little bit larger on-feed numbers, bigger placements, maybe a weaker marketing effort. That points to some weakness in the futures, and that's what we've been focused on. Even though the cash trade coming in at better money this week, the markets largely shrugged that off with the cutout values declining and this on-feed number coming out Friday. So we're in a period of some seasonal weakness in here, and the cash keeps moving higher. So you wonder at what point will some buying interest come into this futures market.
And you got to wonder also, too, if there's going to be a correction coming with it. What about over on the hog side of the complex?
Yeah, this market is kind of like that grain markets that we talked about. Anticipation of that U.S. MCA trade agreement, the Chinese trade agreement, that lifted us off of our lows. That June contract made a low right around $84 and now has rallied about $5. All in this news, just anticipating we'd see better export business. So we're going to have to see that come to pass here. China has kind of canceled a few purchases that they had made for 2020. We need to put them back on the books if we're going to see the market try and push even higher than where it is, up in the $89 to $90 area.
Okay, Brian, thank you very much. Let's look at the slaughter cow market also with us, the latest information from CZ Cattle Market Analytics. Ed Serwin in Amarillo, Texas. It shows us here where the slaughter cow run, 9,900 head. That was down 2,700 head. The boning utility cows, $42 to $55. That was steady to one higher. Over in the cutter lean type cows, those were fully steady. On over to the dairy type cows, the boning utility steady to $1 higher. And for the cutter or lean type cows, they were $1 to $2 higher. Janet, and the cow cutout 185.51, which was down a little bit from last week.
All right. As always, thanks for keeping up with all the numbers for us, John.
Yes, ma'am.